afternoon. This is Chris Brecher with the Simpler Stocks free video for November 15th, 2016. As you see right here, it's about 2 minutes after the close. What a wild market the last couple of days. Just unbelievable, and it just keeps going. NASDAQ down another 54 now. ES is down 125, really nothing. You have the Russell again going absolutely bonkers up 16, and bonds going the other way down another point. Let me just show you something very interesting in here before we all say, oh, I don't even know how to describe it, but before you say, well, the bonds, this isn't that big a deal, I want to show you what the bonds are doing even in Germany. This is the 10-year note. The 10-year Treasury yield in Germany. We're talking about something that literally a month ago was negative 0.15. It's now 0.30. Unbelievable the back up in yields here. In fact, if you go in here and put the U.S. yields, and we're talking about the 10-year yield. And I just want to show you in here, when you look at this, and you put this up here in a weekly yield, and you're going to see this is getting a little dangerous in here, that you have it at 215. If that looks familiar, look at right here. That yield between 215 and 240, that area, that led the decline in August of 2015. Last time, even more recent, this rally in here was November and December 2015, and you know what happened the end of the year in the market. In fact, I'm going to show you something very interesting in here. This is the market last year, and this has been just a constant way of what's going on in the market. I'll then just sum up everything, but this is what I show everybody when we trade on Simpler Stocks. Look at the notes on the left. This has just been going on for years and years in here. Now remember, this is the notes. This is the inverse. So this is actually just the prices. In fact, what I'll do, I'll make this easy on you. I'm going to go and put stockcharts.com back up here. And I'm going to go put up the U.S. yields. And we're going to move it over so you can see what I'm talking about. We're going to put this on a weekly chart. It's a lot easier. In fact, I'll just do it this way. We'll do minus slash ZN. This gives you an idea of the yields, not the price of the notes, just the yields. Now what I want you to do is go to a weekly chart. This is what I find very interesting and potentially very dangerous sometimes. Go on the right in here and put the SPX. We're going to put the SPX on a daily chart, a 2-year daily. And then what you're going to see in here is that when we've had these upticks in yields, see that uptick? What happens? The market gets torpedoed in here. So what I mean by that is we had the uptick in yield July and August of 2015, and then we had the market take a dive. In fact, this is the wrong one. Let me go back. There we go. Market taking a dive on the right. Then what happens is the yields go down, and then the market rallies, and you get that V-type rally. We had another rally of the yields, not the bonds. Guess what? Right before the end of 2016. Then you got, you guessed it, a big old sell-off the beginning of 2016. Yields plummet precipitously, and you get the V-type bottom. Wash, rinse, and repeat. Now, what do you get now? A huge spike in yields. In fact, on a weekly chart, to see it look like this kind of spike, imagine what that looks like on a daily. There you go. The last time we had spikes like this, go put this on the 3-year daily on the left. Well, guess what? You have it. That's the whole point. They're usually a gradual rise. You don't get this spectacular rise. What does the rise on the left look like? Ironically, for some odd reason, it looks like copper. That's because copper is a sign of inflation, and that hurts the bond yield, makes the bond yields go up. Notes go down. What's the moral of the story of this? That when the bond market gets hit, eventually it hits the SPX. But the problem is at this time of year, it could go on longer than you ever want to admit. Look on the right and put the SPX again. These are the yields on the left. And let me just show you. See how the yields popped right here in October, November? This is last year. Now what I want you to see is the market didn't sell off till the end of December. In fact, it rallied when the yields went up because of the holiday effect. That's exactly what I'm talking about. This can go on longer than you ever expect. What I've seen is usually it's around December 2nd, you get your first little reaction. See that last year? Almost to the date, December 2nd. Believe it or not, the same time the year before in 2014. This is amazing to me. Guess what? December 2nd, it started going down. It's just amazing. So I'm expecting us to sit here, even though these are violent divergences, that this could go on until after Thanksgiving. Go and put this up here again, and I'm going to show you again. Here we go again. ES is down a little. NASDAQ getting destroyed. Go and put on the left the ESs. And on the right, put the NASDAQ. I should go over every index, but this is so important, I think we need to go over it. Going to 195 is a little more dramatic in here. That's the ESs on a 195 chart, as you see near all-time high. This is the NASDAQ on the right that is sold off now almost 200 points since then. The key in there is going to be tomorrow. That right there, I've been talking about that for a long time. 4,700. That is right where that green spike was for the election. 1 in the morning. We are at the top of 1 in the morning, right when the election was announced in the NASDAQ. You don't want to even know where that would put the ESs. That would put it right here at 2,100. So just keep in mind those kind of wild things that are going on here and the divergence we're seeing. Now, in the meantime, this promise of great economy coming up, you have to understand that the bond market is sold off. And the reason that becomes important for the stock market is the stock market has been historically overvalued by any measure, except when you take into account ultra-low bond yields. If bonds sell off, that whole premise about a fairly valued ES is thrown out the window. Then it becomes the hope stage. You hope for a giant economic stimulus, and let me just tell you, there are some unbelievable moves in a lot of stocks. Regardless of the Russell, which is composed of drug stocks, which has gone from 1140 to 1300 in a week. Unbelievable move. 10%. Excuse me. I actually hiccuped because it's such a dramatic move. Look at dry ships in here. This stock is bankrupt. This stock 1 week ago was flatlining, bankrupt at about 4.5. It went from Wednesday at 4.5, today 45. That's what I'm talking about. The entire perception that the whole game has changed is leading to some dramatic moves. On simpler stocks on the premium side, we're going to go over some ideas that still might be in play. So I hope everybody's enjoyed this video. Like you know, we still have the 7-day, 30-day trial, $7 30-day trial, I apologize, which includes your chat room. I'm on from 9 to 10 every morning. We find some great setups in there. Premium video, a lot more in depth than what you're hearing now. The email alerts, I put out at least 6 stock and chart ideas. I put out a lot more than that this morning. At least 6 index and futures charts and a lot of unusual option activity. When I see it and I think we can profit from it, I post it. So I hope everybody's enjoyed this video. Went on a little long today. I hope you've enjoyed it. I will talk to you tomorrow.